Yields on U.S. government debt improved on Friday, with the 30-year yield recovering from record lows following a hectic week for the markets. Investors saw the yield curve inversion, which economists saw as a sign of a potential recession, wound down as the 10-year Treasury note rose above the 2-year yield. Stock markets worldwide rose on Monday after optimism over trade discussions and further hopes for a softer policy rekindle risk appetite. Asian equities sharply climbed, with Chinese shares taking the lead as the PBOC announced its plans to reform interest rates, while the European market followed suit after German Finance Minister Olaf Scholz said the country's government could provide $55 billion in stimulus to prevent a recession. Oil prices rose for the third straight day on Tuesday, driven by expectations of the Federal Reserve stimulus to help combat a global economic recession that would lower the demand for crude. Brent crude oil futures added 1 cent to $59.75 per barrel, having gained 1.88% on Monday, while WTI crude oil futures dropped 6 cents to $56.15 per barrel, after advancing 1.44% in the previous session. The minutes of the Federal Reserve's July meeting showed policymakers cited concerns over global growth slowdown and the US-China trade tensions as headwinds, but stopped short of signaling plans to perform a series of rate reductions. The central bank suggested that the best course of action at the moment was to remain flexible and keep an eye on future economic data before they make any rate decisions. The euro-dollar pair might be the focus in the markets on Thursday, as the European Central Bank is due to release the minutes of its most recent policy meeting later in the day. The minutes are expected to offer new hints on the size of ECB's latest round of stimulus, which is set to be revealed on September, while the Eurozone manufacturing and services PMIs will also be closely watched, as both are likely to have declined in August from the previous month.